अमित जी।
अमित।
अमित अग्रवाल जी।
Yeah, good evening, everyone, and welcome you all on the live webinar on handling the faceless assessment organized by Direct Tax Committee of ICI. First of all, I myself, C. Amit Agrawal, and I would like to thank our Chairman of Direct Tax Committee, CA Piyush Chajar sir, and Vice Chairman, CA Vishnu Agrawal sir, for giving this opportunity. I will just briefly introduce about our chairman of DTC, CA Piyush Chajar sir, is having experience of 25 years as a senior partner of Major Chajar and Doshi, Chartered Accountant, a distribution firm located in Mumbai. His educational background is bachelor degree in BCom and also holds a diploma in information system audit, that is DISA. Sir, he is an expert tax litigation and advisory. Piyush Rajah sir has made significant contribution to the finance and accountancy landscape on both national and international level. Notably, he was a member of Central Council member of our institute from 2022 to 2025, and for second term from 2025 to 2029. Within the ICI, he has served all the three pivotal standing committees, executive, examination, and finance, showcasing his multi-faced understanding of the profession. He is currently chairman of Direct Tax Committee and vice chairman of Expert Advisory Committee. He was member of Working Committee for Asian Federation of Accountants. He is currently technical advisor on International Auditing and Assurance Standard Board and member of committee to study fiscal regime and other statutory requirements of business. With this, we welcome you, sir, and I will request you to please give your opening remarks.
Thank you very much, CA Amit Agarwal ji. First of all, a very good evening to all of you, all the respected members of our Institute of Chartered Accountants of India. CA Prasad Bandari, faculty for there, very expert in direct tax, who is also a co-opted member of our direct tax committee and who has been contributing to the direct tax activities of the institute since long. He was part of our groups also, which have been made for the revisions of guidance note on tax audit. We are also concurrently working on certain checklists to be issued by the institute by way of a publication for helping the members in discharging their professional responsibilities as far as income tax return preparation is concerned. My moderator for the day, C. Amit Agarwal, I thank both of you for accepting our invitation and addressing our members.
Thank you, sir.
Amitji and Prasadji, you may know, of course, Prasadji is also concurrently. Amitji was the past chairman of Vasai branch and he's been also serving this institute since long for that matter. And taking it to forward today's seminar, as you all know, this is a Thursday, and every Thursday we generally have such webinars. We try to choose a topic. In absentia, my vice chairman, C. Vishnu Agarwal, the Sam has taken the responsibility also on deciding the topics. And I compliment him for choosing this topic along with C. A. Prasad Bhandari, which is a very important topic on faceless assessments. I know I get a lot of queries, a lot of WhatsApp messages, a lot of issues as far as faceless assessment is concerned. And when I talk of faceless assessments, I'm not talking only of 143.3. In a way, as we all know, even the 143.1 intimation is sort of a summary assessment. And there are so many issues. In fact, last year, my experience, this is my second year as a chairman of Direct Tax Committee. And my experience of last year was I got maximum queries from the members. Prasadji, please note this. And
Yes, sir.
I'm sure you would be
I'm just
addressing these
noting.
issues and you will be helping the members when you are addressing for the next 1.5 hours to 45 minutes. There are a lot of issues as far as CPC was coming. CPC makes adjustments, and sometimes when you are trying to make a rectification applications, we are not getting any way throughout it, and my members face a lot of problems. And in fact, last year when I made more than 21 representations, majority of them were surrounding those adjustments made by CPC. some irregular adjustments which are technically not required to be were made were been made, and then you were left with no option but to file a rectification application which was never been added to, or it was not been decided upon. Then I have to file an appeal. So my members are basically a lot of worried about that, and they used to write to me. Obviously, as a chairman direct tax committee, I used to take that into consideration. We have tried to make a representation also. We have tried to represent before the CBDT, before the tax policy legislation wing also, and also with the CBC. And we are trying to resolve whatever issues. But I think so this has become a never-ending story. And today morning I was just got a call from somebody in respect of TDS. Everybody knows that there is certain demands of TDS has been made for the previous years, and we have already sought an extension for rectifying that from 31st March to 30th June, which has unfortunately not been considered by CBDT yet. But that representation is there. But there are other issues also. I was being told by somebody that if I'm trying to resolve a one issue, there would be another issue cropping up, and again a demand has been raised on traces person. So, of course, I know the faceless assessment. When you're talking about assessment proceedings, but there are a lot of issues. That's what I try to be. Of course, it's a good step moving to a faceless appeal. Myself coming from a background of litigations, and I do see a lot of benefits out of it. But yes, a lot of improvements would be required. Coming apart round the corner, as you all know, there's an income tax bill coming up, and a lot of fraternity members are worried that if this income tax bill comes up, if there are still a complications issues involved as far as e-filing website is concerned, version 2. At the same time, for the benefit of members, the IT team of the CBDT is also working upon e-filing version 3 in the initial planning committee where we were invited by them. And a discussion was also happened that whether we should actually upgrade the existing software in the e-filing version 3, or we should come with the new software. So at the parallelly, they are also working on that. But in case the income tax bill sees the day of the light, which I think so select committee of Lok Sabha is supposed to give their views to Lok Sabha before on 10th of July when the monsoon session starts. And if it gets clear, I'm sure we'll see the day of light from 1st April 2026. But let's see what happens. It coming to this income tax bill, this time Institute has been quite active. It not only after it was introduced on 13th Feb 2024, but also before. In fact, somewhere in on I would say 18th September 2024, when this thought actually came in after the speech of the Honorable Finance Minister in the budget 2024, that she wants to do a comprehensive review of the Income Tax Act. We were engaged by the Ministry of Finance, and we had a preliminary meeting with the Revenue Secretary, whereby it was decided that let us do a comprehensive review of the Income Tax Act with an objective of simplifying the language, reducing litigation. So we did give our suggestions after compiling suggestions from various members across. We did outreach for that purpose also, and we give more than 150 pages document that how a comprehensive review of tax act can happen, and which included removing of all obsolete sections. I would like to tell you that more than 113 obsolete sections have been proposed to be removed in Income Tax Bill 2025. And therefore, when somebody says that it has tried to become concise, the sections, number of sections has come down from 736 odd to 536 odd something. I don't know exact, I'm not recollecting exact numbers, but something like that. That is because certain obsolete sections has been deleted. One may say why 730 were existing, but as you know, existing sections were 115A, A, B, and so on and so forth. So it was not purely numeric, but it was alphanumeric or numeric alpha, something like that. So that's how it is. But our engagement is continuously going on. And after it was introduced, we were the first to be invited by the select committee, which was formed of 31 MPs by the Lok Sabha. We gave our preliminary presentation on 6th of March, and we had a 2 hours 45 minutes discussion on it. And there were questions raised by various MPs in regard to what is the necessity of income tax bill, whether you are happy with it, what are your suggestions, what further could have been done in this particular. So we gave our responses to that. And thereafter, we were asked that why don't you give your clause by clause analysis. Obviously, as soon as when the income tax bill came in and when the CBDT formed, you would have listened to my president's message also on one of the news channel, that as soon as when the income tax bill was introduced, CBDT approached us to form a group of 5 experts, which was formed. And since then, we are concurrently in touch with the various revenue authorities, and we are giving them a support whatever the form they require, basically. That's what an idea. And after the select committee meeting of 6 March, once again, they asked us, why don't they give us a clause by clause comparison, basically, which was submitted to them by 21st of April itself. The 40-member group worked upon it, and each and every member of that particular group was an expert in tax per se. And they gave their views on it, what should be done, what should not be done, why the settled provisions under the Income Tax Act 1961 should not be tinkered with, and our suggestions for the reduction in this section. In fact, one of the important suggestion was that from 536 on the income tax bill, whether we can bring it to 450, whether we can convert further sections into tabulations, maybe in relation to penalties, prosecutions, and in relation to fees. So we have given our suggestions, we have given our draft tabular formats also to the select committee, and also we are writing it to CBD on that matter. And concurrently, we are in touch with the secretary of the select committee. So I think so something good will happen on that. Now, only thing what I can say is it's an honest effort made by the government to simplify. Time will tell whether it will get simplified or not. But we have to, as a matter, as a part of the this government body, as a part of this nation, we feel any effort in this direction. I'm saying effort in this direction to simplify for the benefit of general public. I'm sure we should keep giving our suggestions. My request to each and every member who is listening to me, who may listen to me later also, if you have any suggestions, either on income tax bill or improvement in the Income Tax Act 1961 or in the procedural side, please do write to me. Please write to dtc@ici.in. I can assure you from this particular platform that whatever suggestions you give would be put forth to the experts, would be discussed at the committee level, and if felt appropriate, it would be escalated to the highest authority. That's what I can tell you. Whether they accept it or not is not important. Our duty is that we should be heard. Whatever are our suggestions, we should put forward and then live it upon it. And we'll do our follow up to that extent. Apart from this, of lately on 29th of April, we had a committee meeting of Direct Tax Committee, and two important things which I briefly mentioned, and I told also our faculty Prasad Bandari himself is involved into that, was in regarding to revisions of guidance note on tax audit. For the members, guidance note on tax audit would be revised soon. As you know, implementation guide was issued for the revision in Form 3C previous year. But as implementation guide was recommendatory in nature, guidance note is more like a mandatory, which you are expected them to follow when you are discharging your audit functions. Please do consider that. We are trying to convert that implementation guide and merge into a guidance note, and also make amendments to take care of amendments made through budget 2024 and the budget 2025, and also a lot of judicial rulings which would have come over a period of time, and also another form revision has happened in 3CD this year also, so that will be taken care. And apart from that, as I mentioned earlier, a checklist on income tax returns, we are trying to come all through this. Maybe in the month of June and July, we are mindful of the fact that it should come well in time, so that the members have that copy before they are discharging the audit functions. Definitely will do that. Obviously, coming to Faceless, I've already given my brief comments. I am sure it will be a very engaging session, and I know personally Prasad, when Prasad is addressing, it would be a great opportunity for all of you, because he is not only expert in tax, he has a good knowledge about the technology also. That's the most important fact, and he has been faculty on the institute for a long time period. You can raise your questions if you have not raised earlier. You already have a link, raise the questions. We have a very able moderator, Amit Agarwalji, who would be compiling all that questions and would be raising it before putting it before Prasad Bandari. I am sure Prasad would be able to answer those questions to your satisfactions, and the purpose of this webinar would be served. Thank you very much with this. Thank you very much, Amit, for your introduction. Over to you, Amit.
Thank you, sir, for your kind words and for your opening remarks. Now we have with us our today's session speaker, CA Prasad Bhandari ji. I will just briefly introduce him. He is MCom FCA LLB. Sir is a practicing chartered accountant in Ahmednagar, Pune since 2005 in a firm namely PS Bhandari and Associates. His core area of practice is to handle all types of litigations in income tax. He is also a director and teaching faculty in uh, professional in Bhandari Professional Accounting, a pioneer in CA coaching. Sir has experience of 21 years. He is appointed as a special invitee member of Committee of Public and Government Financial Management of ICI. He was appointed as special invitee of Direct Tax Committee which sir was already referring to. He has made a record of 3 times for teaching the subject on direct tax. He has written the study material of direct tax for students of IPC and final final for CA course. With this, we welcome you, sir. Prashad sir, now you can take the charge, sir.
Just before
Yeah.
Prasadji, you would get to know we have already 1,200 people watching.
Okay.
That
Thank you.
shows the art.
Yes, sir. Yes.
Yes.
Yeah. Thank you very much, Amitji. Yeah. At the outset,
Thank you.
I shall thanks to our own chairman of Direct Tax Committee, CA Piyush Chhajer sir. In absentia, the vice chairman of the Direct Tax Committee, CA Vishnu Ji Agarwal. So thank you very much for entrusting me for this lecture. And as you have bestowed me with the responsibility of solving the query, I will try my best to solve the queries because I know that this topic is such a complicated and raising many issues. So after finishing the lecture, after solving the query, I know that there are many queries would be crop up that we have to again work on that queries also. But I will try my best. And I have taken cognizance of the queries raised by Piyush sir also. I will try to solve all these queries. So with this, I will start with this, and I'm sharing my PPT here. Okay, so here, as far as this topic is concerned, handling the faceless assessment. As far as faceless assessments are concerned, so these faceless assessments that is being introduced in budget 2019. So the purpose of this faceless assessment was to eliminate the interface between the income tax department and the consultants. Also the cost effectiveness also, and the uh, there must be team. There must be involvement of a team while finalizing the assessment because we know that this assessment get finalized with many units. That is there the involvement of assessment unit also, the involvement of verification unit also, technical unit also, review unit also, and all these units are being controlled by the National Faceless Assessment Center. So this is a team build. So as far as this faceless, now we are facing various problems also, and on the other hand, we are facing the easiness in this assessment also because as the one of the purposes of this faceless assessment is to have it cost effective. So as far as our cost is concerned, our traveling get reduced, our time get reduced. You can sit in your office and make all the submissions. You need not to go to the income tax office physically. Even if you have further queries, you may ask for the virtual hearing. So these are the benefits for us because but what happened because of these faceless assessments? There are increase in huge numbers in the litigations, and because of this, what happened actually? This must have been introduced by by the government in a phased manners, but it has been introduced for all. So what happened as far as the rural areas are concerned? They are not conversant with the technology. Messages comes, mail comes, and they are just ignoring the messages, they are just ignoring the mail because of unawareness about the law. So because of that, what happened key, whatever the demand has been raised, say for example, for the sake of example, if the demand is raised by the department, say 10, 100 rupees, so out of that 5 rupees are actually collectible, and 95, these are all infructuous demands because of the unawareness of this faceless. And because of unawareness, there was failure for the submission, for failure in the replies to the notices issued by the assessing officers. So because of that, what happened? For example, I have deposited 1 crore in my bank account, I have got all the messages from the assessing officer, but being unaware about the laws, I have ignored it. Or say, for example, my account was opened by any earlier consultant, maybe tax consultant, maybe chartered accountant. I have left the work from there. All the messages, all the mails were issued at his mobile number or his mail ID. He did not inform me. Accordingly, my assessment has been finalized ex parte, and this ex parte save all 1 crore rupees. See, 1 crore rupees, I'm doing the business. I'm doing the business and I'm earning say 8 to 10% in that. Means in that 1 crore rupees, my income is say 8 lakh. But while finalizing the assessment, assessing officer has added 1 crore rupees to my income, and raised the demand with respect to the income of 1 crore rupees. So because of that, fictitious demand has been raised. So because of this, that much litigations have been increased. As I said, on the contrary, we can say that there is much easiness in this. And here means my personal experience is that, or many of you must have experienced that, at the time of making the submission, if submission is on merit with appropriate findings, with appropriate supported by the appropriate case laws, your assessment get at ease, your assessment get finalized at ease without any addition. So this on the contrary, this also must be faced by all of you. So here, see, the 1/9/2024 is the crucial date, because on 1/9/2024 many amendments have taken place in this faceless assessment. So in 148 also, in 148A also, in 148, 149, 150, 151. So many changes have taken place. So relevant in that, we will study some provisions which are applicable till 1/9/2024, and will the relevant provisions which are applicable with effect from 1/9/2024, we will discuss both which are relevant for us. Much focus would be on the provisions which were before 1/9/2024, because the assessments have already been finalized, or some on the eve of the finalization of the same. And here we will discuss that what are the mistakes that AO had committed at the time of completing that, or what are the points which we can raise in the appeal also. So very minor points. This all with my personal experience. I have jotted all these points and will going to share with you. If at all there would be any query, you are free to raise the queries. So I shall start with this. With the provisions of 147. So 147 here, up to 31st 8 2024. As I said, key crucial date on 1/9/2024, many changes have taken place in these provisions of faceless assessment. So 147, what was earlier here? So here there was a reason to believe earlier. If 147, if you go with the wordings of income escapism, if you go with the section 147, if the what it says, if the assessing officer has reason to believe that any income chargeable to tax as escape assessment for any assessment year, he may, subject to the provision of the section 148 to 153, assess or reassess such income and also any other income chargeable to tax which has escaped assessment and which comes to his notice subsequently in the course of the proceeding under this section. We'll come on this. Whatever is the highlighted portion, we'll discuss on this one by one. So here main point was there, as you are reading here also, the AO has reason to believe. So unless the assessing officer has reason to believe that there is income escapement or escapement of income in case of the SSC, in case of any assessment year, he cannot proceed further for reopening the case. So there must be reason to believe. We'll talk and talk on this later on also. And in the new provision, we will see that word reason to believe is not there. We'll see that, because see here what happened. Department, the purpose of changing this provisions with effect from 1/9/2024. See, first purpose, when earlier there was 148, we could get directly the 148 instead of 148 A, B, then D. In that case, what happened? There were many litigations. Why? Because say after issue of 148, we had a right to ask for the reasons after filing the return of income. Then After the return of income is being filed, we had right to ask for the reasons. Then we could take the objection to the reasons. Then if reasons could not be disposed of by the assessing officer by a speaking order, then that was one of the important grounds for the appeal. Because if that reason, if AO failed to dispose of the reasons with a speaking order, then it could have been a invalid order. Then even if the reasons were disposed of, it must be just a speaking order. So what happened then? This 148A scenario has come with the faceless, and here what they are saying here, ki all these data, all the material on the basis of which you are going to reassess the income, or 148 has been issued, that has been provided to the SSC at the time of issue of 148AB itself, or in the change scenario 148A subsection 1. So here you are getting the reasons, you are getting the material at a prior to issue of 148. So to that extent the litigation has been reduced. Again some litigation has been reduced. We will talk when we will see the updated provisions or amended provisions here. So here, as I said, here reason to believe, there must be reason to believe. Unless and until the reason to believe is there, so AO cannot issue the 148. Now, if you proceed further with this section only, then is first proviso. What the first proviso said, that where an assessment under 143.3 or this section has been made for the relevant assessment year, no action shall be taken under this section after the expiry of 4 years. We know that earlier the time limit was 6 years maximum. That is being up to 4 years and beyond 4 years. So up to 4 years, there was no bar as far as income is concerned and as far as the disclosure from the SSC is concerned. But the AO, if AO want to issue the notice beyond 4 years, and it has to fulfill two conditions. That one, income escapement must be exceeding one lakh rupees, and secondly, that if the assessment has already taken place under 143.3 or 147, and in that assessment the SSC has failed to disclose fully and truly all the material facts necessary for this assessment, then he could issue the notice beyond 4 years also, but up to 6 years only. Up to 6 years only. That is under 147. Now, there were certain cases where deemed escapements also. In case of deemed escapements, where this is deemed escapement where no return of income has been filed and the AO has reason to believe that the income is exceeding the basic assumption which is not chargeable to tax. Means AO, SSC has taxable income, but he has not filed the return of income. That is, it is deemed escapement. Then when return of income has been furnished, but no assessment has been made. Return of income has already been furnished by the SSC, but assessment has not been made, and AO observed that SSC has understated the income or has claimed excessive loss or deduction or allowance or excessive relief has been claimed in the return of income. So this is also the reason for that. This is a deemed escapement. Then here, where the SSC has failed to furnish the report in under section 92 in case of international transaction, that is also one of the deemed escapement. If the assessment has already been made, but that has been under assessed, or such income has been assessed at a too lower rate. Say for example, if SSC is at a too lower rate, say for example, income had required to be charged at 30%, but it has been charged as a 10%, or it is at a lower rate. Means, say for example, if SSC is dealing in such activity which the SSC has treated as a capital gain, and the AO is of the view that it must be chargeable as a business income. So if it is a business income, it would be charged as a 30%. Instead of, it would be charged as a 10% or whatever the lower rate. So in that case, there may be deemed escapement, or such income has been made subject to the excessive relief under this act, or here he has got the excessive relief in that assessment, or where he has claimed excessive loss, or he has claimed the excessive depreciation, or any other allowance under this act has been computed. So these are the deemed escapements under this. So here 147, if you go further, when the person is found to have any asset located outside India. So again, but it has not been disclosed and the AO has of the view that this asset has been owned by that person, which has been located outside India. So that was also under the deemed escapement. Now here from 1/9/2024. Now again we'll have the look into the time limit which has been changed. See, earlier it was 4 years and 6 years. Then thereafter it has been changed to 3 years and 10 years. So here the AO could have issued the notice under 148 up to 3 years from the end of the relevant assessment year at for escapement of any income. But if he has to issue the notice beyond 3 years, but up to 10 years, then income escapement must be 50 lakh rupees or exceeding 50 lakh rupees. And that escapement may be in the nature of any asset, in the nature of any expenditure on any event, or in the nature of any occasion, expenditure in on any occasion, or it may be in the form of a book entry. Now that 3 years and 10 years have been reduced to 3 years and 5 years. So up to 3 years, it has been the 3 years provision was same that for any income, it can be issued 148 can be issued up to 3 years, but that 10 years time limit has been reduced to 5 years. Now this 3 years and 5 years is applicable for us. And for now this we will see this changed 147 with effect from 1/9/2024. What the change has been made in 147. So what 147 changed 147 says, if any income chargeable to tax in the case of an assessee has escaped assessment for any assessment year, the assessing officer may, subject to the provision of section 148 to 153, assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction for such assessment year herein after in this section, and section 148 to 153 referred to as relevant assessment. See, now this changed wordings of section 147. Here the word reason to believe is not there. Right? Reason to believe is not there. One explanation has been added to this for 147. For the purpose of the assessment or reassessment or recomputation under this section, the assessing officer may assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of proceeding under this section, irrespective of the fact that the provision of section 148A have not been complied with. See, very important change has been inserted here. Earlier, what was the situation? Earlier, what was the situation in the light of, say, judgment of Honorable Bombay High Court in case of Jet Airways? See, in earlier situation, what was possible? In case the AO has issued the one notice under 148 with the reason, say, for example, sale of the land, sale of the agricultural land. Say, for example, the AO had the information that the SSC has sold the land of 1 crore rupees and he issued 148. And then in response to notice under 148, SSC has filed the return also. And he clarified that though I have sold the land of 1 crore rupees, it was rural agricultural land and it was not capital asset. Therefore, there was no question of declaring any income. So here, there is no addition warranted on the issue on which 148 was issued, because 148 was issued for sale of this land to see that whether there is escapement of income on sale of this agricultural land of 1 crore rupees. But it has been clarified by the SSE in the assessment procedure that this land was rural agricultural land. So therefore, there is no question. So of course, the AO also gets satisfied with that. But at the time of assessment, he came to know, the learned AO came to know that that 1 crore rupees has been deposited in the bank account or it has been given to anyone for loan, and that SSE has earned interest income of 10 lakh rupees on that deposit. So that 10 lakh rupees has escaped the assessment. That 10 lakh rupees has escaped the assessment. So in this case, the AO cannot assess that 10 lakh rupees in that assessment. Why? Because what the Honorable Bombay High Court in case of Jet Airways says, कि if the issue which was the subject matter of the 148, if there is no addition on that issue, then AO cannot made any addition in respect of other issues which were not the subject matter of the original 148 unless he issues the another 148 fresh 148 for that issue. That was the case. And this has happened in many cases, even in my own cases also, right? And we get escape from that assessment. Only technically on this legal issue, there was no addition on the original reason, and AO has made the addition on another issue, and that assessment became invalid assessment. Now here to plug that, here it has been new clause has been inserted, matlab explanation has been given that I'm reading the underline in blue mark. The learning and assessing officer may assess or reassess the income in respect of any issue which has escaped the assessment, and such issue comes to his notice subsequently. Subsequently means after issue of notice under 148. Subsequently, in the course of the proceeding under this section, irrespective of the fact that provision of section 148 have not been complied with, means 148A need not to be complied with for assessing that additional income. So they have plugged, I think they have plugged that issue here by inserting this provision. Earlier, it was not there. Okay, now 148A. Now earlier, up to 31st 8 2024, 148A B, 148A into bracket small a, small b, small c, and small d. These are the clauses. These are the earlier clauses A, B, C, D. Now they have changed. They have changed it to with effect from 1/9/2024, 148A 1, 2, 3, 4. Right? No much change is there. They have just merged A and B into one. Right. So we'll see the earlier provision first, and then we'll go to the new provision. And here we will complete 148, 149, 150, 151. We'll complete all these sections, and then I have some, sorry, I have some specific points on which I have to present it. So I will present it and then we'll take the question answer. Firstly, the purpose is to clear the provision first, then you will also get clear all the provisions, and then you would be in a position to ask the queries after I finish my points. So here first, what was the earlier? This A was not much relevant because directly we used to get the notice under 148 AB after conducting all these inquiries. So first earlier assessing officer before issue of notice under 148, he shall conduct the inquiries and with of course the prior approval of the specified authorities. This was A, and then B. We used to get the notices under 148 AB. What that 148 AB says, it is for providing an opportunity. Means we used to get that notice to show cause within such time as may be specified in the notice, being not less than 7 days, but not exceeding 30 days from the date on which such notice is received. See, now very important point. You must have faced this as far as this time limit is concerned. See, when this procedure was new to the department also, then many of the AOs has issued the notices with a time gap of 2 days by giving the time for submission of 2 days, 3 days, 4 days, but less than 7 days. So for the assessments, for the notices issued during March 22, March 23, March 24, please look into that. Means that, see, all points, as I said, all points I will clear for the assessment which have already completed under Faceless, which are lying with the CIT appeal, and in that you can take the additional ground. For that, we will discuss, and what are the precautions you have to take while handling the faceless assessment. Further, that also we are going to cover it. But these are for the completed assessments, faceless assessment, where you can raise the additional grounds, which for the assessment which are pending with the CIT appeal. So please see that for those notices, whether in those notices, whether the time limit of 7 days has been given or not. So please check that. Another, when it has came to the knowledge of the department that the AOs are issuing the notices with a giving of 2 3 days time limit only. On the contrary, in the provision, it has been said that the being clearly stated that the time limit not being less than 7 days. Then they have issued again 148AB with say 10 days, 15 days. Now, one thing which commonly I've observed in many of the notices which have been issued for giving the time limit more than 7 days. Earlier, the notice was given, say, for example, on 15th of March 2024. The notice was issued, but time limit was only 3 days. So when the AO realized the mistake that, Array, I have to give the time limit of minimum 7 days. Then on 25th of March 24, he has issued the notice again 148AB by giving me the 10 days time or 15 days time. Then these notices, please observe that what I have observed, majority of the notices, they are issued without affixing the digital signatures. And 144B is very clear. 144B, where the procedure has been given, 144B is very clear. Every electronic notice of whatever given by assessment unit, review unit, or whatever unit, that must affix the digital signature. So please see that the notices issued after the AO realized the mistake that 148AB must be given with a time limit for submission of minimum 7 days. Then please see whether that notice contain the digital signature, whether the notice affix the digital signature, and even check the order under 148AD, which has been passed, that is also without digital signature. This majority I have observed in many assessments. So please take that also. That would also be the point of ground for your appeal also. Please check that. Then see here, whatever reply we are furnishing, it is minimum 7 days and maximum 30 days. We have to submit the reply. And after submitting the reply, that reply AO has to consider under 148AC. And then after considering this reply, AO has to pass the order under 148AD. Now, when that order must be passed, it order must be passed within 1 month from the end of the month in which the reply of the SSC has been furnished under 148AC. Or if no reply has been submitted by the SSC, then it is within 1 month from the end of the month in which the time limit to submit the reply expires. It's a very simple. Say, for example, 25th of March 2024, you get a notice, you get a time limit of 10 days, you have submitted it, and you have submitted it on 8th of April. So you have submitted in April 24, then time limit it would be to pass 148A D order, a time limit would be 31st of May. Right? This is very simple, very simple. So see the time limits also those but here it is AO in as far as whatever assessments I have faced in all the cases, there's all orders are in time limit only. Some provisions are some provisos also there. So first proviso is that in case of section 132, on or after first day of April 2021. See, up to 31st March 2021, the search cases used to be assessed under 153A. Then thereafter, all these cases been brought under 148, 147, 148, and now from with effect from 1/9/2024, again the search cases has been put in a block assessment. Earlier, that 6 years block, right? Earlier to that, it was 10 years long. But now this has again shifted to 150, 158 BC. The many senior members must be knowing that. So, but during this period after 1 4 2021 till this 31st 8 2024, in search cases also 148 used to be issued. So, in case there is search on any person, then this provision will not be applicable. Means 148A need not to be given. The AO can issue directly 148 to the SSC. Or in case this books of accounts or search is there, seizure is there, or books of accounts has been seized. In case of any other person, that also this 148A provision need not to be fulfilled. Then again, in case books of accounts or document are seized in a search of any other person and that pertains to or in related to the SSC, then in respect, in case the notice is to be issued to the SSC, then directly 148 can be issued to the SSC in case of this search and seizure cases. Yes, in one more case, the AO need not to follow 148A procedure. That in case of if AO has received the information under scheme notified under 135A. So 135A generally your client must be getting the notice under 133.6, right? And that is based on your the information which is already there in 26 AIS and TIS data is there. So that is in on the basis of that, and specifically these notices in case the AO or the SSC has not filed the return of income, but the transactions which are exceeding your basic assumption limit, they are reflecting there. So they are issuing 133.6 notices. So if you are satisfying, if you are complying with, or if you are filing the response to the satisfaction of that officer, then the case has not been forwarded further. If we satisfied that there is no escapement of income, then the case has not been forwarded further from that unit. But in case you fail to reply or you make the reply, but that person is not satisfied, that officer is not satisfied about your reply, then it forward the material to the assessing officer, the judicial assessing officer, and then the assessing officer issues you directly 148. In that case also, you need not, the AO need not to follow the procedure of 148A. Yeah, of course, for the purpose of this section, specified authority means the specified authority 151. We'll come to 151, then we'll talk about the specified authority. Now 148, what is the procedure? Amended procedure, and with effect from 1/9/2024. That is section 148A. As I said, 148A, A, B, C, D. Now it is 148, 1, 2, 3, 4. As I said, A and B has been merged, and then 2, 3, 4 are there. Just have the look then. So here, where the assessing officer has information which suggests that the income chargeable taxes escaped the assessment, then again he has to issue the notice. So earlier notice he was issuing under 148A-B. Now he will issue the notice, and in some many cases you must have got the notices recently under 148A-1. He will issue the notice. जो notice B में भेजता था, now you will get a notice under 1, subsection 1. Here, see the time limit for submission. One thing you must be observing, and in 148A-B, there was time limit for submission of minimum 7 days and up to 30 days. Here, there is no time limit specified. Means again, one point of litigation removed by the department. Because department must be knowing that we have already filed the appeal for that 7 days also and that 30 days also, right? So therefore here the time limit for submission has been removed in the new section. Then second, on receipt of this, we have to make the submission under subsection 2. Then assessing officer shall pass the order. Which order? Which he was passing under 148A-D. Now he has to pass the order under 148-3, subsection 3. 148A-3. The assessing officer shall pass this order with the prior approval of the specified approval. We will see all these provisions where we have to take this prior approval and how it is to be taken and what are the mistakes that the department has committed in that. And fourth is that the provision of this section shall not apply where the assessing officer has received the information under the scheme notified under 135A. Here you must have observed that search 132, 132A requisition, this has been removed. Why? Because with effect from 1/9/2024, the block assessment 158 BC has been introduced. So here, therefore, all these provisions for related to search and seizure has been removed here and they have been placed there. So here only provision left where the AO need not to follow the procedure of 148A, 148A 1, 2, 3 in case under one if you receive the information under 135A. That as we have discussed under if you get the notice under 133(6). So in those cases, AO need not to follow this procedure. So that provision is continued here. So this is about the 148A. Specified authority again specified authority we will discuss. They have again made the simplification in the specified authority, right? Because earlier we will come to that, then we will discuss the provision also. Then here now section 148. 148. Now, what is the new provision of 148? We have completed 147 also, 148, 148A also, now 148 notice is being issued. So, what is this notice and what is the time limit for issue of this notice? We'll discuss in 149 also. So, before making the assessment, reassessment or recompletion under 147, the assessing officer shall subject to the provision of 148A. Issue notice to the SSG along with the copy of order passed under 148A3. Earlier it was 148AD, requiring him to furnish within such a period as may be specified in the notice, not exceeding 3 months from the end of the notice. Now, watch carefully. Watch carefully. Earlier, the time limit to file the return in response to notice under 148 was 30 days. Maximum time limit was 30 days. Now, with effect from 1/9/2024, that 30 days time limit has been extended to 3 months from the end of the month in which the notice is issued. Means if you must have gone through these notices now issued with effect from on or after 1/9/2024, you must have seen that the in 148 notice the AO has mentioned that you are requested to file the return within 92 days, 108 days. So he's computing from the date of issue of notice, minimum 90 days, minimum 90 days. Right. So here, minimum 90 days in the sense that is a 3 months. So that change has been taken. So see, you must have experienced that after 1/9/2024 also, you must have received the notices under 148, which were showing the time limit to submit the return within 30 days only. 30. In that case, if you have filed the return not within 30 days, but after 60 days, but within 3 months, and the AO, see, in many cases, you must have observed that AO treated the return non-est, that is, as if return has not been filed. So, in this case, so when he treat that income return of income as non-est, when it is filed beyond the due date specified in notice under 148, and that is generally 30 days. So, in case the notice is issued on or after 1/9/2024, even if in the notice under 148, the time limit is been shown at 30 days, and you have filed the return of income in response to that notice after 60 days, within 3 months, and AO treated your return non-ist being filed beyond the due date specified in the notice under 148 being 30 days, in that case, you can raise this. If assessment has already been made, then you can raise this ground in your appeal. Because the AO did not follow the changed period. The change period with effect from 1/9/2024 is that the time limit is of 3 months from the end of the month in which the notice is issued. So kindly see this carefully. Provided that no notice under this section shall be issued unless there is information, of course, information with the assessing officer which suggests that this income is chargeable to tax which has escaped the assessment. And this material you get along with the notice under 148A1. Earlier it was B. So here you are getting all this material on the basis of which the AO has reopened this assessment. Provided further, where the assessing officer has received information under this scheme notified under 135A, no notice under this section shall be issued without prior approval of the. See, in this faceless, the AO cannot issue any notice without the approval of the specified authority. So at every point of time, he has to take the approval from the specified authority. Okay, second is the return of income required under subsection 1 shall be furnished in such form and verified in such a manner, setting forth such other particular as may be prescribed, and the provision of this act apply accordingly, as if such return were a return required to be furnished under 139. See, one more important point. Of course, this is the debatable issue, but this you can raise in your appeal. See, here you have to file the return in response to notice under 148. What is being given in subsection 2? That the provisions of this act shall apply to that return as if that return is a return which were a return required to be furnished under 139. You have filed the return under 148. That return, earlier, say for example, you have not filed the return of income. You have not filed the return of income. Say, take a specific case of cooperative society. Cooperative society, we know that with effect from assessment year 1819, section 80 AC has been introduced, stating that in case of a cooperative society also, if it want to claim the deduction under section 80P, the return of income must be filed within the time limit specified under 139. Say for assessment year 1819, the society did not file the return of income. Then the notice of 148 comes. But the society has filed the return in response to notice under 148 in time. Then what provision says? That the provisions of this act shall apply accordingly as if such return were a return required to be furnished under 139. See, even if you have filed the return under 148, AO is not going to listen you. AO is not going to accept your say that you could not file the return under 139. So now you are filing the return under 148. He is going to disallow your deduction under 80P since you have not filed the return under 139. But in appeal, you can take a stand that, okay, I could not file the return under 139 originally, but I have filed the return under 148, and in 148 subsection 2 it is specifically given that the provision of this act shall apply accordingly as if the return has been filed under 139. Means all the provision of 139 will be applicable to the return which is filed under 148. So you can take a stand that now I am eligible to claim that deduction, which I could not claim it since I did not file the return earlier. So this, you can take a benefit of this. Provided that any return of income required under subsection 1 furnished after the expiry. Yes, it is being made very clear here with effect from 1/9/2024 that if the time limit of 3 months given to you, maximum time limit of 3 months given to you for filing the return in response to notice under 148. If you fail to make the return within that time limit, that is the 3 months, then if you file the return after the expiry of the period, then it shall not be deemed to be the return under 139. So whatever benefit which we were talking about the cooperative society, you cannot claim if you have filed the return beyond 148, because it is section itself, it has been provided that in case you have filed the return beyond the time limit given in 148, this return shall not be treated as return under 139. Means whatever second chance you could have got, that has been lost. Right. So here it is our duty to promptly file the return in time. Promptly file the return in time. Okay. So here section 149. Section 149, where the time limit is given for to issue 148 also and 148A also. Time limit. So here, first for 148. Now earlier 148, the time limit was 3 years, and as I said, 5 years. Now here, with effect from 1/9/2024, 3 years and extra 3 months have been granted. See, it is my opinion. This is because, see, what happens, the department gets, the AO gets the information from all the units for the purpose of reopening the information, whatever he's getting from the unit, say investigation unit or say under 135, etc. And he has to make inquiries. Means he doesn't get proper time, because it he received generally the information at the fag of the year end, say in the on 25th of March, on 26th of March, or say during the last week of the March. Then he don't get time to make the verification. And when he don't get the time for verification, this would be our first ground that AO did not carry the verification. Right. So for that, for issue of, and again for making the after making the verification also, he has to follow up the time limit for issuing the 148 also. So here, considering that, to give a sufficient time for the AO, the 3 further months have been granted. So you take your own time. Further 3 months are there to issue 148. Right. So this is 3 years and 3 months. And for the if this amount which has escaped the assessment is likely to exceed 50 lakh rupees, 50 lakh rupees or likely to exceed 50 lakh rupees. For that, exceeding 3 years, 3 months, exceeding 3 years, 3 months, but not more than 5 years and 3 months. Again, for that also, 3 months have been extended with this new provision. And as far as this 148A is concerned, time limit for that 148A, it is for no notice under 148 shall be issued if 3 years. But for 148A, through only 3 years, because he has to complete that up to 31st of March. So only 3 years has been given, and for the income which has escaped the assessment or likely to exceeds or likely to exceed 50 lakh rupees or more, for that it is exceeding 3 years, but not more than 5 years. That time limit is given. But for 148, a buffer has been given of further 3 months after the 3 years have been elapsed. Right. So this is the time limit for issue of this notice under 148. See, now here section 150 is very, very important. 150. What 150 subsection 1 says? See, this 148 can be issued at any point of time to give the effect of any order passed by any order of, say, a revision or reference or appeal or any order by court. Then there is no time limit for 148 to issue of time limit. To give the effect of that order, that 148 can be issued at any point of time. But please note subsection 2. What subsection 2? We'll discuss with this with an example to clarify this. What subsection 2 says? Kindly see this carefully. What subsection 2 says? Yes, you can issue 148 at any point of time, but the provision of subsection 1 shall not apply in any case where any such assessment or reassessment or recomputation as is referred to in that subsection relates to any assessment year in respect of which an assessment, reassessment, or recomputation could not have been made at the time the order which was subject matter of appeal, reference, revision, as the case may be, was made by reason of any other provision limiting the time. I know that कुछ नहीं समझा है, right? So therefore, मुझे भी कुछ नहीं समझा था. When I formulated, we have studied, we have formulated the example, then I could get it clear. So this can be clear with a simple example. You will get this very clearly. Say, take an example. Say assessment year 13-14 is there. Case related to assessment year 13-14. Assessment order has been passed on 31st March 2016, since the 2 years time limit was there earlier. What was the case? That there was some dispute about the chargeability of a particular income. That assessee was saying that income is not chargeable to tax, but assessing officer says yes, it is chargeable to tax. So this was like that kind. The matter went up to the High Court, and finally High Court passed the order on 15th March 2019. Finally, what High Court stated? The High Court passed the order stating that the income is chargeable to tax. Yes, that particular income under consideration, that is chargeable to tax, but not in assessment year 13-14, but in assessment year 9-10. It was not the income of 13-14, but it was the income of 9-10, AY 9-10. Now, when it come to the knowledge that the income was not for 13-14, but it was related to 9-10, it came to know only when the High Court, the Honorable High Court has given the decision, that is on 15th March 2019. Now we have to see. Now the question is whether AO can issue the notice under section 148 on 15/3/2019, that is the date of judgment of Honorable High Court, in respect of 2009-10. This is the question, because in subsection 1 we have discussed the notice can be issued at any point of time to give the effect of order of the court, or say revision or whatever we do. Now, in this case, subsection 2 that we are going to clarify it with the example, with this example. Now, in this case, how to determine that whether AO can issue the notice or not? Here we have to see that when the assessment order has been passed, when the original assessment order has been passed. So assessment order has been passed on 31st March 2016. This is clear. Assessment order was passed on 31st March 2016. Now what subsection 2 says, that when this assessment order was passed, whether on the date of passing the assessment order, whether it was possible for AO to issue 148 to the year under consideration, that is 9-10. Now, whether on 31st March 2016, when the order was passed, whether it was possible to issue the notice under 148 for the assessment year 9-10, whether it was possible. So, at that time, it was the period of 6 years. So, assessment year 13-14, assessment year 9-10. For 9-10, the period of 6 years was there. So 9-10, 11, 12, 13, 14, 15, 16. Yes, it is the last day, rather 31st March 2016 was the last day on which the notice could be issued. So if it was possible on the date on which the order was passed, then it is possible at any point of time. It is possible at any point of time. You can issue the notice under 148 for any point of time. Only you have to see that at the time of passing the assessment order, whether notice could be issued to that assessment year, that is 9-10. So it was possible because on the last day the notice was passed and the order was passed, and on last day the notice was possible to issue. Right. So on the contrary, what if the assessment order was passed on 5/4/2016? What if the assessment order is passed on 5/4/2016? Whether it was possible on 5/4/2016 to issue notice under 148 to assessment year 9-10? No, because period was lapsed. Then if it was not possible, then it is not possible forever. And that is the interpretation of section 150 subsection 2. Hope you could understand all this, right? Okay, so this is section 150. Now section 151. That is again 151. We know that in case of 151 there is amendment with effect from 1/9/2024 again to rather to mitigate this litigation, because some litigations have taken place. We are going to highlight that also. So what 151 earlier, up to 31st/8/2024, who were the specified authorities? So here sanction, this is 151 for sanction for the notice, for issue of the notice. Specified authority for this purpose means, see, we know that notice could be issued up to 3 years, and beyond 3 years up to 5 years. So the specified authority up to 3 years was different, and uh, beyond 3 years and up to 5 years was different. So if the notice is up to 3 years or less than 3 years, then it could be issued under 148A-D as well as 148. Order under 148A-D and notice under 148, it could be issued with the prior approval of principal commissioner, principal director, or commissioner or director. This is the provision if the AO has to issue notice up to 3 years, or if 3 years or less than 3 years have lapsed. And if 3 years have lapsed, but not more than 5 years, then in that case, principal chief commissioner or principal director general or chief commissioner or director general. So if more than 3 years have lapsed from the end of the assessment year, but up to 5 years, because 5 years the last the AO which could the notice can be issued under 148. Beyond 5 years, the AO could not issue the notice. So here, up to 3 years, it is principal commissioner, principal director, or the commissioner or director, and beyond 3 years, up to 5 years, it is principal chief commissioner, principal director general, or chief commissioner or director general. These were the sanctioning authorities. Then, sanctioning authorities with effect from 1/9/2020. As I said, they have simplified this to remove this difficulty, to remove the litigations which were raised the grounds. So here they have simplified this section. No time limit. The only specified authority is additional commissioner, additional director, joint commissioner, joint director. Nothing doing about your 3 years, nothing doing about your 5 years. No time limit. So irrespective of your time limit, up to 3 years, beyond 3 years, up to 5 years, only one specified authority, that is additional commissioner or additional director or joint commissioner or joint director, as the case may be, wherever it is applicable. Right? Okay. So this is they have simplified. Now come to this. So the required provisions we have gone through, but now some important aspect with this. Here, before we go to these important aspects, here, most important point to have, rather to enjoy, I can say, this faceless is that don't, rather you please keep watch on your notices. Whenever you are opening the whenever you are registering your client on the portal, even though primary number or primary mail ID of the client, right, for keeping the track, you keep your secondary number and your secondary email ID. I know that in many cases it was not, it won't be possible, but at least to keep a track for that, because client may be aware or may not be aware about this. And as earlier in the beginning also I have cleared that because of unawareness, the litigation have increased. Right. So you don't skip any of the dates. You take the adjournment. Means with that you could get escape from the penalty for non-attendance or non-reply. That is 271(1)(b) penalty. Right. So you give adjournment number of times, but you don't skip to file the reply. For each and every notice you file the reply for in the faceless. Right. You ask the time. If you have genuinely the difficulty, you ask the time, but don't skip to reply. Don't skip your reply. Now come to these important aspects. Few important aspects of about 10 important aspects. It was very, very important. First is prior approval of the specified authority. As I said, to remove that difficulty, they have changed. But this is, as I said, this is for majority of this is for the assessment, faceless assessment, which you have completed. And these are the crucial points which you can raise in your, if you have already taken, there is no question. But if you have not raised, you please raise in the additional ground in your appeal, which have already been filed. So prior approval of the specified authority. We have discussed that prior approval up to 3 years earlier, up to 31st 8 2024. Up to 3 years, it is principal commissioner or principal director or director. And beyond 3 years and up to 5 years, it is principal chief commissioner or principal DG or PCIT or CCIT or the DG. We require the approval. So this we will discuss with an example, and then you go through, then you just go across your assessments, those which are already completed, with this respect to check this approvals. Say for example, assessment year is 1819. Assessment year is 1819. Notice under section 148 AB is issued on 25th March 2022. That is within 3 years. That is within 3 years. Order under 148 AD passed on 14/4/2022. Right, because some time has been given. Right, an order has been passed on 14/4/2022. Notice under 148 issued on 14/4/2022. Of course, whatever is the order date under 148 AD, the notice under 148 has been issued on the same day. So that is on the same day. Now approval has been obtained of PCIT, Principal Commissioner of Income Tax. See what happened. Notice under 148 AB is issued on 25th March 2022. From that point itself, the approval process has started. He has passed this 148 AD on 14/4 and issued 148 on 14/4 with the approval of principal CIT. But as far as this time limit is concerned, for assessment year 1819, the 3 years lapses on 31st March 2022. And beyond 3 years, because the AO has issued the notice under 148, even order passed under 148 AD on 14/4, that is beyond 3 years. So when it is beyond 3 years, he was supposed to take the approval, the prior approval of principal CCIT or principal DG instead of the PCIT. He has taken the approval of PCIT, but he was supposed to take the approval of either principal CC or the CC. Right. So this is a very valid ground. So whether approval is correctly obtained? No, approval has not been correctly obtained. So please go through your assessments which have already been completed. Please see that issue is there. In many cases, on this cutoff dated, more specifically, these mistakes have been committed. And these are being accepted at the tribunal level also. And here the Honorable Bombay High Court also, the judgment is there in case of Holiday Developer Private Limited. That and the recent judgment, 29th January 2024, the judgment is there. In case the 3 years have already been lapsed, it must be the AO must take the approval of principal CC or the CC and not the PCIT. So please go through your assessment which have already been completed to see this issue. Second, filing the return of income in response to notice under 148. We have already discussed that we have to file the return of income within 30 days in the earlier scenario, and in the new change scenario, which is from 1/9/2024, within 3 months from the issue of the notice. So here, first is, if return is filed in time, if return is being filed in time, then see whether notice under 143(2) has been issued or not. Because once you have filed the return of income, then AO is duty bound to issue notice under 143(2). If AO passes, if AO completes the assessment without issuing 143(2), it is invalid assessment. It is invalid assessment. So see, after you file the return of income, notice under 143(2) has been issued. Then another case, a return filed beyond the due date. Now you have filed the return. I'm talking about the scenario before 1/9/2024. return filed beyond the due date. The time limit was given of 30 days. You have missed that 30 days, but you have filed it after. Or in the recent assessment which are going on, also see that whether return has been filed or not. If return has not been filed, then see any notice after 148, see the notice under 142.1. If in that notice under 142.1, see that in many cases, AO gives this paragraph in first paragraph, this notice under 142. What is this? The highlighted portion in 142.1. Prepare a true and correct return of your income in respect of which you are assessable under Income Tax Act in during the assessment during the previous year relevant to the assessment mentioned above. Now see very careful, very technical point. The time limit was given of 30 days. Say for example, 31st March 2024, you have got the 148. And on 30th April 2024, you're supposed to file the return of income, but you did not file the return of income. Then AO has issued something in June, say 25th of June 2024, AO issued 142.1. And in that 142.1, this paragraph was there. Prepare a true and correct return of your income. Here, then you have filed a return of income. And then at the time of completing the assessment, AO has observed and AO has written that since you have failed to file the return of income within the time limit specified under 148, that is 30 days. So your income is treated as non-ist. Your return of income is treated as non-ist, invalid. Therefore, 143.2 has not been issued. Has not been issued. But now see 142.1. In 142.1, which is issued in June 2024, it is stated prepare true and correct. So when he is stating in the 142.1 that prepare true and correct return means he suo moto extended the time limit to file the return of income under 148. In 148, the time limit was 30 days. And in June, because time limit has already been expired on 30th April. And in June, he is issuing 142.1. And he himself has extended the date. Then how he can say that you have filed the return beyond the due date? How he can say that you have filed the return of income beyond the due date, where he himself has extended the time limit to file the return of income? Right. So this important aspect, see this important aspect also. If you miss the date, then see 142.1. In 141, if this wordings are there, then you file the return of income. The AO cannot treat it non-ist. And even if it is being treated as non-ist, you can take this ground, the first legal ground in your appeal. This is very important point here. Coming to next. Yeah, of course, this has been decided in Rajasthan High Court in case of Commissioner of Income Tax, Jaipur 3 versus Kamla Devi Sharma, Sri Kailash Chand Sharma. So this has been held by Rajasthan High Court. Now, yes, very crucial and very important point in case of digital signature. One point I've already discussed you whenever the AO has second time issued 148AB, then see whether digital signature has been affixed or not for the subsequent notice and even to the order under 148A. In many cases, you will find that digital signature has not been affixed. And here, this 144B6 1B mandates that it must be every notice that what it says, an electronic record shall be authenticated by the assessment unit, verification unit, technical unit, or review unit, as the case may be, by affixing the digital signature. So digital signature is very important. Now, some crucial points in relation to this digital signature. See whether digital signature is, firstly, see whether it is affixed or not. First point, see whether digital signature has been affixed or not. Okay, see the timing of digital signature. You can see, you are all the techno-savvy persons, you can see the timing of this attaching the digital signature. Means it is the timing of the signing. See, what is the chronological order? First, 148A-D get passed. Or in new scenario, 148A 4 order will be passed. The 3 order will be passed, subsection 3. And thereafter 148 will be issued, because first he gets the approval for 148A-D or 148A-3, subsection 3, the new scenario. And thereafter he is authorized to issue 148. So please see the timing of 148A-B, as well as issue of notice under 148A-D. Sorry, 148. In many cases, which I came across, where the timing of digital signature of 148 was prior to 148AD. Means the AO has signed 148A first and then he signed 148AD. However, the difference was of some seconds or minutes, not minutes, but seconds only. But technically it is wrong. Technically it is wrong, because you are supposed to issue, you are supposed to pass the order under 148AD, and in that order you get an approval for issuing 148. So please see the timing of both the orders as well as the notice under 148, that this timing, the chronological order must be matched. The chronological order must be matched here. Another very, very important point. Very important. Just recently I came across. Recently, because we always under impression that whatever department the as far as technicality is following, department is following it correctly. But exceptionally, I got something which is what we can say new ground here. See the validity of the DSC. So have you checked at any point of time the validity of the DSC? Recently, I came across one interesting thing. So this, just a minute, I'll just, now this will be easily readable to you. See this, one of the, in one of my clients, this, I just, under curiosity, I just checked the validity. So see, this is the validity of the digital signature. So digital signature was valid from 10 February 2020 to 9 February 2022. Generally, it is for 2 years, right? And what is the signing time? Signing time, see, at this point of signing time is 15th March 2022, whereas the validity was up to 9 to 2022. Means this digital signature, which has already been lapsed, which has already been expired, so that digital signature has been affected. And see see, this is the note: the selected certificate has error, not time valid. The signature has already been given a remark that this certificate has error, not time valid. Means see, you have to see one more issue, one more technical issue, that whatever digital signature the AO is attaching to the notices or to the orders, we have to see whether these notices, whether the digital signature DSC is valid during the period during which the same has been signed. So here, interestingly, this has not been in time. So the time, it is beyond time, and on the signature itself, the remark has also been there that it has not been in time. So when it is not been time, it is in time, then it is as if it is not been issued, because signature is there. And once there is no signature, then there is violation of section 144B. Then your notice, your order is without any validity. So that is invalid. That is bad in law. You can take this ground. So check this also. Check this also in your notices. Yeah. Now, content of the notice under 148 in case of a search and seizure or requisition under 132. See the contents. I just came across with this. See the contents. Just for your sake, I have reproducing here. See, this is, hope this is clearly visible to you. See, this is the notice under 148, is one of my clients. Now, see, point 123 have given. And see, first, I have informed that a search was initiated under 132 in your case. See, in my SSG's case, there was no search initiated. His first case, the search under 132 of the Act in your case, or in case of a person in respect of which you are accessible under that. Second, I am satisfied with the approval of the PCIT or CIT that the books of accounts are seized or requisition under 132 or 132A of the Act in case of so and so party pertains or pertain to or any information contained therein relate to you or the person in respect of you are accessible. Second para is again repeated here in the third place. And I therefore propose to assess or reassess. Now, see, these are the contents of the notice under 148. Now, here tell me whether the contents are, matlab, we can say that these are contents are valid, whether this notice under 148 is valid. Right. Now, here you must be remembering that in case of 271 1C, right, if AO failed to strike off one limb, on that many of the penalties get deleted on technical point, and you are issuing these kinds of 148 where you have not ticked the proper, so from where the SSC can file the return of income correctly. So please see all the notices. This is a vague order. You can take a ground that this is a vague order. First, in first case, it is saying that the search has been conducted on the SSE, whereas there is no search on the SSE. Then second case, he is not sure about ki books of accounts are requisition of which person. He is not sure about the income escapement in case of SSE or in case of a person in respect of whom the SSE is responsible. SSE is accessible. So this is the vague. You can take the first ground there. Yeah, this is a vague 148 without having any specific. So how the SEC can file the return of income? Because 148 must be specific, showing that what is the nature of income which the SSC has escaped the assessment. So on this basis, and then majority cases 148, as we have said, in case of search and seizure cases, there is no requirement of 148A. Therefore, they are issuing notice under 148 directly. So see the content of the notice. This would be very important for your ground of appeal. Coming to the next, coming to the very crucial, very important point. Very important point. Notices, see, specifically you go through the notices which are issued on 31st March 2021. Specifically on 31st March 2021. If the in many cases which I have came across, in many cases where the notices has been issued on 31st March 2021, even though the date of 148 is also to 31st March 2021, even it is digitally signed on 31st March 2021. But if you open your portal, if you open the portal of the SSE, and if you could see, you may find in many cases that the issue of notice is on 1st April 2021. See here, issued on here, this is issued on 1st April 2021. Issued on 1st April 2021. So if this is issued on 2021, see, in case of 148, the wording issue is there, service is not there. And in our portal, the department itself is saying that it is issued on 1st April 2021. So even though it would be in a time of 3 years or 5 years, whatever, even though it would be in a time, but on 1st April 2021 and onward, the new scheme of 148A has started. The AO has not followed 148A B, 148A D. He has not followed. You can take this ground. And recently, the Honorable Delhi ITAT has come up with this decision in case of Mukesh Khurana, right, ITA number 3902 2024, dated 21st March 2025. And before this decision come, in many appeals, I have taken this ground. And of course, fortunately, I've got this support for pleading my case. And you will get the support for pleading your cases also with this case law. Recently, on 21st March 2025, the Honorable Delhi ITAT has come up with this issue. Similarly, this issue has been dealt in is Kanubai Patel, Gujarat High Court, in case of Kanubai Patel HUF versus Hiren Bhatt. In that case, what was happened? the AO issued the notice. AO has prepared the notice on say 25th of or say 30th of March, but it has been posted, it has been given, handed over to the post authorities on 7th of April. See, means it is issued on 7th of April. Though it has been signed, stamped on 30th of March, it has been handed over to the postal authorities on 7th of April. So, in the Honorable Gujarat High Court taken a stand that it has been handed over means it has been issued. The handing over to the postal authority is issuing the notice. It is on 7th of April and it was supposed to be issued up to 31st of March. Therefore, this the Honorable Gujarat High Court has stated that 148 was invalid. 148 is invalid. So please see for the specific notices which the dated 31st March 2021. Please see this point. Please see this point. Very, very important point. Yes, then coming to next check, reasons given. Yes, this check reasons given in 148AB. Now it is 148A1, and the order passed in 148AD, and in new scenario is 148A3. See whether there is conformity in the reasons. In many times may happen that it has been the notice of 148AB or 148A1 has been issued for one issue, and order under 148AD or 148A3 has been passed for another issue. That would be a good ground for you. So please check that also. Notices issued beyond 6 years for the assessment year prior to 1/4/2021. See, for this a very good case law, you just will just have with an example. Uh, See, for this refer to first proviso to 149(1)(b). First proviso to 149(1)(b). What first proviso to 149(1)? See, what in 149(1)(b), it is no notice under 148 shall be issued beyond a period of 3 years, up to 5 years. Earlier it was up to 10 years, unless the income which has escaped the assessment or likely to which has escaped the assessment is 50 lakh rupees or likely to exceed 50 lakh rupees, then only you can issue the notice beyond 3 years, up to 5 years or up to 10 years. This was the issue, right? But here, after the changing in the regime of the department for faceless assessment with effect from 1/4/2021, what 149(1)(b) proviso said, if the notice under 148 it can be issued only if a notice under 148 could not have been issued at the time on account of being beyond the time limit specified under section provision of this clause, the 149(1)(b). This, as I said, by reading it will get confused. We'll discuss this with an example, a simple example. That is the case law of Rajiv Bansal. That is the Honorable Supreme Court has given the case law. Relevant with example will given. This is an example prepared on the basis of the Rajiv Bansal case. Assessment year is of 2016-17. Show cause notice under 148A(b) has been issued on 31st March 2023. Accordingly, order under 148AD was passed on 29th April 2023. Notice under 148 has been issued on the same day, 29/4/2023. 6 year under old regime 149 under section 149 lapsed on 31st March 2023. Here the department said that even though the order is passed on 29/4 or notice has been issued on 29/4, right? So it has been, the time limit has been extended under TOLA, but here the TOLA is not applicable. Here we have to see that proviso to 149(1)(b). Even after 1/4/2021, there was proviso to 149(1)(b). And what was the proviso? That the notice for the assessments year prior to 1/4/2021 could be issued under 148 within the 6 years span only from the end of the relevant assessment year. Right, the TOLA was not applicable for that. So here, the assessment year 16, 17, 31st March, the 148A-B was issued within six years, but 148A-D order and 148 has been issued on 29/4/2023. That is 6 years, but old regime, the time has been lapse of 6 years on 31st March 2023, means the order under 148A-D as well as the notice under 148 was supposed to be issued by 31st March 2023 only, which has not been issued. Therefore, that assessment itself is bad in law. Assessment itself is bad in law. So this is given by Honorable Supreme Court in case of Rajiv Bansal. This is a landmark case of Rajiv Bansal and the recent decision of 3rd of October 2024. Right, so this is important aspect, one of the important aspects. Yes, in case of notice issued under 148 where no need to follow procedure under 148A, in case of a search case or in case of the 135A, if you're that AO is getting the information under 135A and issuing the directly notice under 148, then you have to just follow the prescribed line of action which has been given under GK and drive shaft, right? 259 ITR 19 page number. So Supreme Court has given the prescribed guideline for that once you have got the 148. So what is being prescribed that once you get the 148, you file the return in response to 148 in time. Then once you file the return of income in time, you have a right to ask for the reasons recorded. On what basis 148 has been issued, you ask for the reasons. Once you get the reasons, you file the objection, if any, for the reasons recorded. After you raise the objection, AO is supposed to dispose of that objection first with a speaking order. It should be with a speaking order, right? And after the AO pass the speaking order for disposal, if AO failed to pass the speaking order, then assessment become invalid. If AO pass the speaking order, then after AO pass the order for disposal, he shall allow at least 30 days. And after 30 days only, he is allowed to pass the final assessment order. So please check whether AO has allowed you the 30 days. See, in case you have to file any read against that, so for that purpose, that 30 days time limit has been given. Right. So please see that disposal order and the final assessment order, there must be time gap of 30 days. Okay, then next is ask for the cross examination of a person. In case the AO has issued the notice under 148, in case notice has been issued under 148 on the basis of a statement recorded of a third person. So you ask for this, if the statement copy has not been provided to you, you ask for the statement copy of the full copy of the statement. You ask for the cross examination of that person, that I want to cross examine him. Whatever he is stating in the statement, that is not at all applicable to, but so for that I have to cross examine. So you ask for the cross examination because here the principle of natural justice is there. It must be followed. So in case of these are the cases where the principle of natural justice has not been followed. In some cases, the cross examination has not been allowed. Therefore, the court has declared the order as invalid. So in the Mangaldas and Verma is the Honorable Bombay High Court, Vasant Lal and Company, Honorable Supreme Court, and there are many more cases. Just for the sake of this quotation, I am giving this. C.F. Thomas 284 ITR 557 is the Honorable Kerala High Court. So this you have right to ask for the cross examination of this. Yes, now here this probably the last point. Notice under 140 issued by jurisdictional assessing officer versus faceless assessing officer. This issue, very popular issue, we can say, which is being between the department and the SSC, right? And this is being dealt by the Honorable Bombay High Court in case of Hexaware Technologies Limited, and which is pending at the Supreme Court, right? Which is pending at the Supreme Court because what 151A says, 151A says, which talks about the faceless assessment. It clearly states that all the communication must be faceless. Means every notice must be issued by the faceless assessing officer rather than the jurisdictional officer, unless specifically been stated. Unless specifically, say for example, in case of search cases, the faceless is not there. You can have the physical access there, right? But wherever, in case of a faceless assessment, all the notices must be issued by the faceless assessing officer, not the jurisdictional assessing officer. And in all the cases, you must have observed that notices under 148 has been issued by the jurisdictional assessing officer and not the faceless assessing. And Honorable Bombay High Court has given the decision in favor of the SAC. Apart from this, the Honorable Court has decided many more issues. One by one, we will go through that. The issues answered by this Honorable High Court. First, whether TOLA, so that taxation of other laws, that is extension of limitation act, has been passed post COVID for extending the time limit in many cases. So here, but whether TOLA is applicable for assessment year 15-16, and whether any notice issued under 148 after 31st March 2021 will travel back to the original date, answer is no. TOLA is also not applicable for 15-16. Secondly, court has answered whether the notice under 27th August 2022 issued under section 148 of the act is barred by limitation as per the first proviso to 149. Just now what we have discussed, right? That is 6 years, even after notice is issued after 1/4/2021, but for the assessment year prior to 21, then it must be within 6 years. And here 15-16, see, this year is under consideration is AY 15-16, and 6 years ends on 31st March 2022, and the notice under 140 has been issued on 27th August 2022. Similarly, in case of our example, so here the Honorable Court is saying whether the notice dated 27th August 22 issued by one under 148 of the Act is barred by limitation as per the first proviso. We have already referred to first proviso under 149(1). Yes, the notice is time barred. Thirdly, whether the impugned notice dated 27 August is invalid and banned in law, the same has been issued without dean. So you have to take care that whether dean is there or not, you have to check whether the UDIN is there or not. Generally is there, but in some cases, in last year, we have also experienced that in some notices have come physically without dean. So please see that whether dean is there or not. So this, you can take shelter of this case. Yes. Okay. Then fourth question, the court has answered whether the impugned notice dated 27th August is invalid and bad in law, being issued by jurisdictional assessing officer, as the same was not in accordance with section 154, 151A of the Act. As I said, 151A talks about the faceless. It's introduction of the faceless assessment. And in that, it has been stated that every communication must be through the faceless system. So therefore, court is saying that whether the impugned notice under 27 on dated 27th August is invalid and bad in law, being issued by jurisdictional assessing officer, and the court is saying yes, it is bad in law. It is bad in law. Then whether the issue raised in impugned order show an alleged escapement of income represented in the form of an asset, expenditure in respect of transaction in relation to an event or an entry in the books of accounts as required under 149(1)(b) of the Act. See, the issue involved in the hexaware was on the 2 points. That is deduction, exemption under section 10AA and deduction under 80JJAA. So they are talking about the deduction. You could reopen the assessment only if there is alleged escapement of income in the form of an asset, an expenditure, or entry in the books of accounts. So deduction, whatever claimed under 10AA or 80JJAA, so this is a deduction. So this is not coming in any of the definition of asset, expenditure, or entry in the books of accounts. So here the court has very rightly has concluded that whether this issue raised in respect of asset, expenditure, or the entry, yes, court is saying no. Court is saying no, no, because it was related to the deduction, and deduction is not nowhere coming in the definition of asset, expenditure, of entry in the books of account. So this aspect you have to see also. So whether respondent number one has proposed to reopen, that is the AO, on the basis of change of opinion, yes, because the assessment are already taken place in that case. If it is permissible, no. The assessment, the reopening of the assessment on the basis of change of opinion, it is not permissible. It is not permissible. So when the claim of deduction under section 80 JJA of the Act has been consistently allowed in favor of the petitioner by the assessing officer, appellate authority in the earlier year, can the assessing officer have belief that there is an escapement of income? No. So assessing officer cannot have that belief that there is escapement of income, because repetitively, constantly, the appellate authorities, assessing officer have allowing the claim of deduction under 80 double J double A. So there is no escapement. Whether the approval granted by the sanction by the sanction authority is valid, yes, it was valid. But on the all other grounds, the negative answer is the negative. Means it is in the favor of the SSC and against the department. Now, this case, you can take all these points for your appeal, but this case is now is in the lying before the Honorable Supreme Court. So till that time, we have to wait, but we have to raise all these grounds in our appeal, right? If the Honorable Supreme Court gives it in favor of the SSC, then you will automatically get your assessment finished or appeal finished on the legal ground itself. You need not to go into the merits. You need not to go into the merits, right? Okay, so we'll come up on turn. And one more point which is being raised by Honorable Chairman Piyush sir, that as far as the rectifications are concerned, everybody is facing the problems actually. Rectification by CPC. So what is the best way what we are applying practically speaking? Because see, that is वो दीवार है, कितने भी आप सर पटक लो कुछ नहीं होने वाला. So what you have to do, but you have to keep some patience for that. I see you may raise a grievance. I don't know that means not we are not getting the positive replies for that. So you file one rectification, file second rectification. You have then two options: either to file physical rectification of the jurisdictional assessing officer. But the only issue with the jurisdictional assessing officer is that you have to check whether the rights for that assessment shares are available with the AO or not, or you make request to the AO that please ask for the rights, call the rights for that assessment year and get it done. This is the first option. A second option, you file the appeal against 154 rather than going into the appeal, because we know that appeal is also faceless, and once the appeal is being filed, then you don't know that when it's going to be listed and when you are going to finalize that appeal. So is better, and the easy way out is that after you file first rectification, try for the second time. If you get failure on that, if you did not succeed on that, you file rectification physical with the judicial assessing officer. But please see whether the rectification rights are there or not. If they are not there, please ask him to call the rights and get the rectification done. Right. This is a practical solution which I am applying, which I am in a position to advise you. Right. Okay. So please, if at all there would be any query, I will happy to solve the same. I will try to solve on my level best.
Thank you, Professor. It was very nice session. What to do if officer asks to visit in faceless meeting?
Sorry.
Hello,
Sorry.
sir. What to do if officer asks to visit in
Officer asked to visit.
to visit in faceless meeting?
Faceless meeting
what to
is
do
means
if
it's
officer
video conferencing. Video
no
conferencing.
no physically.
How
If you
AO could
physically,
how AO can ask to meet physically?
yeah,
AO cannot. This is a faceless system. Now how AO can contact? It's
okay,
not at all possible.
yes.
No, no.
And sir, second is the if video conferencing is attended by PA, letter of authority is mandatory for submission to faceless assessing officer during VC.
Sir, your voice is trembling.
Sir, if
In
video
video
conferencing is
conferencing,
being attended, if just a second, if video conferencing is being attended by the CA, the
mm,
letter of authority is mandatory for submission
yeah,
to
it's for the
faceless.
yeah, it is mandatory because see anyone can plead there, na. So you should have the letter of authority of the chartered accountant to submit there, and there is separate tab for submitting the letter of authority also.
I have come across there is one query. I have come across few cases where only 2 days time given for reply. By the time client inform us about notice, reply due date already gone. Why officers are
Yeah.
issuing such?
See, actually, we cannot rather take anything against that, but we don't have any option but to file the appeal and take that first ground that principle of natural justice has been violated. We can't ask AO because we don't know the AO. The only remedy is to file the appeal and take that ground before the CIT appeal.
Oh. Then second, next is the assessing officer during video conference only listen to us without replying anything. There is no communication. It is difficult to understand whether he has understood our point of view, as normally there are no counter question are asked. Is there anything do for that? Can we do for that?
No, sir, no, sir, no. Because see, this is a subjective matter. The every AO has its own perspective that in what way he shall rather respond in the video conferencing. So we don't have any remedy but to take this ground also in appeal because see, we cannot because we don't know. What we can do, you can raise a grievance. Right, this assessing officer, there
Okay.
was no counter question, but you have to give a proper submission, even though he has not responded, you have crossed you, but you have to file it, and even if he has not considered the same, then you have to take a ground because we cannot contact them. Na?
Then next is this, sir. How can we make sure that order is not made without considering all the points raised? Many times some of the points are rejected on grounds of some additional evidence which are not even asked for.
Not getting the question actually.
Sir, question is just a second. How we can make sure that order is not made without considering all the points raised, because many a times some of the points are rejected on the ground of additional evidence which are not even they even officer asked us.
See again, again. For that, we cannot do. Once we get the order, then we come to know that on which are the points which have been considered and which are the points which have been rejected. So whatever the grounds which are rejected, for which you have a proper explanation, then again you have to take that stand before the appeal only. After passing the order, there is no remedy but to file the appeal. Or if you are damn sure that yes, this is absolutely wrong, then you may take a chance of 264 revision. But again, in case of 264 revision, there is that is risk, because once 264 has been passed, and if it is not you are not satisfied with that 264, then there is no other alternate but to go for writ in the high court. Whereas in if you file the appeal, then for appeal you have second appeal
Okay.
and then high court. Yes.
So next is the even after filing appeal and submitting all the documents, all necessary documents, not got hearing opportunity. More than 2 years left. What is the way out?
See what happened, what we are doing. you file, you must have received the window enablement notice in all cases. But hearing notice under 250, you might not have got. So whenever you are getting the notice of enablement of window, then you go there, you file the response there. Ki your honor, you are kindly requested to allow us the early hearing. You give the reason in that the so
Okay.
and so demand is outstanding, their department is pursuing for the demand, we don't have we are not in a position to pay that demand as the demand is infructuous, so please allow us the early hearing. So in you allow this for one or two times, then you will get the notice from the department or from the CIT appeal.
Okay.
Yeah.
Uh, then next is the VC is not working through opted. What is the recourse available? When the officer has
See, if you have time, if you have time for complete, if the AO has time for completion of the assessment, then you raise a grievance that VC was opted, but due to some technical reason, it could not be joined. So please allow us the again the VC. You can raise a grievance also. You can write it to the AO also. How to write? Whatever is the latest notice open is there. So you find file comment in that. You file reply in that for AO also and a raise grievance also. So that definitely been entertained by the department, and again this VC opportunity could be given to you.
okay. Sir, last question. How can get sir? Last question. How we can get all this material that is PDF file for future reference? No, sorry.
Which
This is
file?
the
Which
for
file?
that. Whether notice under section. Sorry. That was not. That was they are asking
Okay.
for your PPT file.
Hmm, hmm, hmm.
Whether notice under section 148A is required if notice under section 133(6) is issued.
See, when 133.6 is issued, department in asking clarification about the financial transactions which have entered into, that is on the basis of your AI's data. If you could reconcile that data, if you could see
Yeah.
the 133.6, it is with the some annexure, and in that annexure the details of transactions given to you. If you could reconcile it with 26 AS, you will find that the same data is reflected there. So you give the reconciliation, give the explanation, and once you have given the explanation to the satisfaction of the that officer, then he don't forward the data to the AO. But if you fail to give the answer, or if the data is not satisfactory, your reply is not satisfactory, then he forward it to the AO, and the AO directly issues notice under 148. Then there is no requirement of 148A, B, and 148A, D in that case.
Sir, it is observed that the grievance cell is not effective for solving grievances. Anybody really studying the matter is doubtful. The result is that grievance is not solved at all. Considerable time for of the consultant and assessee is wasted as well.
Yes, yes, same experience is here. Everybody is experiencing same also. In many times, the our institute also given, and with this now again, we'll being a member of DTC also, I will talk to the honorable chairman Piyush ji to again rigorously follow this matter with the CBDT, and if needed, will request the honorable chairman as well as vice chairman to take this matter before the CBDT for this, because this is the need of every person, every consultant, every chartered accountant. Actually, we all are facing this problem. Means this is a time where we have to put we have to raise the grievance against the grievance system.
Sir, recently Income Tax Department has seen for disallowing 80 GGC. Even the SSC has all the valid documents and valid transfer to
See,
party, sending penalty notice. Please suggest course of action and sustainability in appeal.
see, your penalty must be in respect of 270A for underreporting or misreporting. So best course. First is what happened ki out of 199 are bogus. So don't do that bogus work. First, my request, sincere request. Don't even suggest also, and don't even do also, because in many cases the search were conducted by the department, also the CBI also, and where it has been found that all the bogus claims have been made for the donations to the political party, also to the other charitable institutions also, but more specifically the charitable institutions. So in that case, the one genuine donor also face the problem in that. So there is he can file the appeal before this and produce all the documents, and he can get the escape. But as far as the penalty is concerned, if it is under 270A for underreporting or misreporting, then take a simple ground that, see the assessment order. In assessment order, you could see that no clause or sub clause has been mentioned while initiating the penalty proceeding. You just take this first clause apart from your merit clause, you will succeed in the appeal itself.
Question: whether notice under section 148 may be issued without following the procedure of 148A. In such case, under section 132, now there are only one exception as compared to earlier four exceptions provided in 148A.
Yes, there is only one exception now, 135A, because now search cases have been under 158 BC.
Yeah. With this, sir, I would like to thank you for giving your valuable time for our today's webinar and to Direct Tax Committee. So, thank you, sir, for your valuable time, sir.
Yes, so thank you very much for giving me this opportunity. Thank you very much.
Thanks a lot, sir. Thank you. Now we are ending our this today's webinar. Thank you, everyone.